What is the role of the CFO in today's world? Should the CFO act as a strategic partner to other parts of the company or just as a risk manager? Welcome to CurrencyCast. My name is Agustin McKinley. I'm the Senior Financial Writer at Cantox and your host. In this episode, we have the pleasure to welcome Bonnie Tomei, who has held the position of Chief Financial Officer and Head of Finance at several US-based technology companies. Bonnie is the recipient of the FEI Silicon Valley Women CFO of the Year. Bonnie, a very warm welcome to you, and thank you for joining us today on CurrencyCast.
Hi, everybody. Thanks for having me here today.
Bonnie Tomei, could you introduce yourself?
Sure. My name is Bonnie Tomei. I'm a California CPA. I'm currently the CFO of Spectra7 Microsystems. We're a company listed on the Toronto Stock Exchange Venture Exchange. I'm also a board member for two privately held companies. My experience includes 2 IPOs, 2 de-SPAC process, extensive M&A transactions for various multinational companies, particularly in the semiconductors, SaaS, and other markets. Thanks again.
Let's start by asking the following question. What is a typical day of the CFO of an American technology company?
Well, I could say that a typical day for most senior role would be meetings, and meetings more. But I think the target really is to look at the strategic vision and how to apply those, as well as investor relations, customer relationships, supplier relationships. Obviously, cash is king, queen, or otherwise. And so managing that is also important. And a lot of times when you look at international companies or multinational companies, we're looking at different companies or subsidiaries in different geographic locations. And the involvement for a CFO could be looking at some of the more, I guess, difficult things that comes with managing international operations. But basically, depending on the size of your staff, the level of involvement really changes based on what's going on. For example, if there's an audit and you have a team that deals with the audit, maybe you just get an update. But of course, anything that could impact your P&L and your balance sheet, something that we always keep tab on.
No, right, absolutely. Look, you mentioned headquarters and subsidiaries. Maybe we'll come back to that because it's also a very important topic to us. Tell us about the difference in roles between the CFO or the head of finance, the controller. I know you have held all of those positions before.
Yes. And one thing I didn't mention is that all of those roles really, or a typical day of a CFO is really to also help other divisions, departments to achieving what they want, because the strategic vision is really about a team effort. So when I take a look at the differences of of those 3 roles that you talked about, is really about focus. The controller may be more focused on compilation, making sure that the regulation requirements are done. The recording of financials, they may be much closer to managing the cash on a daily basis because AP and transactional processing is under the purview of the controller. But a head of finance will probably be a lot more focused on the FP&A side of things, the more internally focused to supporting all of the teams across different departments. They may be also very involved in the M&A activities. And of course, the CFO is the quarterback, and also the CFO is looking at a lot more in managing the investor expectations, the board's expectations, as well as other nuggets, much more outwardly looking, and also meeting the annual objectives and setting those strategic vision.
Absolutely. All right. Now, let's discuss, if you will, the difference in outlook between now, say, the CFO and the treasurer in particular. Is it a matter of skills? Is it a matter of strategic vision? Is it a matter of capacities in terms of risk management?
Oh, absolutely. Treasury is when you mention those 3 roles, Treasury a lot of times fall into the CFO role. And the reason being is that Treasury also manages risk, also manages cash and also manages, corporate vision about particularly M&A and other big decisions. However, all of those needs to really cross one more department, which is tax. A lot of people think tax is just filing returns, but all of the when you think about multinational, if they're not talking to each other, if tax is not at the table, if treasury is not at the table, a lot of these decisions could be siloed, and therefore you're not going to get good return, I guess, or process in getting your cash either repatriated where they need to be or sent out to a subsidiaries, to achieve what you want to have done. So all of that has to be really thought through.
Right.
I'll give a quick example. A company wanted to pay off its debt, and when they're looking at across all of the cash that they have available and the capital investment they have made, they have determined that maybe one of the choices would be to sell a building in India. Well, in order to get the cash back into the US to pay for a debt in the US, withholding taxes, you got to repatriate, you got to look at it from, is it going to be a loan? How much of the loan, and in terms of percentage of interest you have to pay. Now we're getting into the weeds. The moral of the story is, without consideration of tax environment between all of these different geographic locations, you can't be making a decision that is the best for the company.
Right. I see the point. And by the way, you mentioned the term silos, and that's a term that is a favorite to us, because we are absolutely keen on removing those artificial silos within companies. But that leads to the question of technology. To what extent? So first, who is in charge of, say, broadly the digitalization of treasury operations? Is it mostly the CFO? Is it the board? Is it the treasurer? And to what extent does technology enable those silos to be removed?
Yeah, so it really has a lot to do with where you have your talent. I can see that a controller, and I've been a controller for many years in my career, have owned that treasury role. And, and again, looking at where the insurance is going to be for risk management. But a lot of times the daily blocking and tackling is really about, where is the cash? Where are we going to get it in, and where is it going to go out? And also planning for the big, either debt or capital raises or M&A activities. All of that, generally, if you don't have a separate treasurer, you will have probably your controller group to manage that. And then strategically, the CFO would then pay all of the attention of, okay, great, you think you should pay these vendors, but we now have these other objectives. So then the CFO would give oversight. And of course, one thing that we also didn't talk about is, or that we should talk about, is the governance piece of it. So the board of directors, particularly the audit committee, should be adopting an investment policy so that we could use that to succinctly thought about where the cash should go. I can share with you, I worked for a Bitcoin miner at one point in my career. So fintech is something that's really near and dear to my heart.
Right.
Should we hold Bitcoins? Any corporate America can tell you that if I were in the shoe of a CFO in their company and they're not a Bitcoin miner, holding Bitcoins has definitely not been widely accepted, and it would be seen as thoughtless. And so we have to really have a good investment policy to dictate all of that. So what you said, the second question is, how do you break away these silos? And I think the best thing is really about leadership. It's about sharing the strategic vision. Are we going to acquire something? We are going to grow in this geographic location. What are the tax implications? And getting everybody to the table and have a discussion. And of course, you talked about also sharing the information. The information would probably be much less about the cash itself, but more so if we were to move the cash, where are they, and how are we gonna accomplish that in the least, I guess, costly
Right.
manner.
Okay. Now that leads maybe indirectly to another topic, which is one topic I know you have a lot of experience about, and it's accounting. First, a general question before going a little bit more into specifics. To what extent does automation technology ease the task of accounting in general?
Oh, absolutely.
Is it a fair question?
Absolutely. The technology stack is very important to any financial organization, and actually not just finance, but across the company. Whenever we think about the cash or the ERP system, ERP is no longer just an accounting system, right? It's enterprise resource planning system. It's really about the entire company, and it touches upon everyone. So the automation of that is important. Now, I have to say, we brought a company public, and within the first 16 months, put in 7 different tools. And the reason why we need to do that is because whenever you're publicly traded, or you're preparing to be publicly traded, or to be a good company to have insightful information that you could share, that is not going to take 3 weeks to close your books, and therefore have some meaningful information, you need to have the technology stack. So I can see, particularly in the financial or the treasury management side, I can share with you pain points about how we wanted to know how much we can factor every day, and that information is only available when we can consolidate all of the bank information into one place. And a lot of times, we all know how it happens. Everybody has a spreadsheet, and then hand type the information in the foreign currency. They translate the amount, and then they figure out, okay, well, this foreign location is not going to be the place where we're going to make decision on hedging. It's all going to be done in the U.S., but I need to know how much I need to leave in that location. And a lot of times the hedging decision could be naturally hedge it. Let's just put more dollars, more currency in that bank account today and lock in the rate. All of that information should be available at first glance. And of course, you always allocate a resource to do that every day. That's just knowing where things are. So it's a laborious process. And we have also tried using the banks. Banks have thought to use MT40, or is a reporting mechanism to pull all of that data into their own portal. But right. A lot of the foreign banks are not participating. And so you get not a very complete picture. And then even if you get the information, it's not very easy to read. And how do you translate all of them? So it's definitely a pain. So automation is important.
Absolutely. Look, you mentioned the spreadsheet, the Excel, the files, and this is a topic that is important to us as we advise companies to use application programming interface technology to do away with spreadsheet risk, and also to fine tune also the cash position at any time. Speaking about accounting, once again, we've seen some potential clients telling us that they would shy away altogether from hedging their currency exposure because of the perceived cost of implementing hedge accounting. But we want to explain that right now technology is available with perfect, we call end-to-end traceability, that allows you to trace back all of the hedge items to the corresponding hedging instruments. And are those fears not exaggerated? I mean, the fear that the accounting the accounting process, or the compilation of the required information, is such a costly process that you will decide to shy away altogether from hedging. Is that not an exaggeration?
Yes. Anytime you think about adding complexity, hedge accounting particularly. The ASC is 1,200 pages of documents, and therefore it adds complexity. So unless you have a team, if my senior accountant, my controller, my treasurer has the background and experience dealing with it, then of course it would be very easy for them to implement. But I think there is a knowledge gap in terms of understanding what hedge accounting requires and how to put it into a very nice, neat package, and therefore sending it off to the auditors at the end of the year or every quarter, so then they would fully understand what is it that we're doing, and therefore reflecting the benefits of hedge accounting. I think the difficulty about that is not having that level of experience.
Right.
In my management of all of these companies I've been with, the technical accountants don't generally have that experience, even if we were hiring them from a Big Four to be our, technical accounting manager and eventually be a CAO. Those experiences obviously could be had. It's just not that commonly and widely available. And I think that's the difficult part. The trade-off is, well, how much money are we going to, what is the benefit? Is it really to cover the top side of revenue and therefore protecting your gross margin? But of course, a lot of times you, as you can tell, American companies or US companies are, buying or selling specifically in the US dollars. So to de-risk their currency risk.
Absolutely.
Perfectly naturally. And of course, that does not always that possible. If you think about all of the folks who are selling into a Chinese market, for example, they have to sell it locally, and of course they have to derive renminbi, yuan as a income. How do they hedge against that? If you take a look at yuan, have gone from 6.3 now up to 7.3. That's a very big devaluation. And how much could you really hedge that? You could maybe arrange with a local company that would buy the yuan, but when the yuan is in such an exchange rate, hopefully you had some foresight 24 months ago to start those hedge programs. But at any rate, so what I'm trying to get is that the reason why hedge accounting is something that a lot of people don't think about or want to get into is because of the complexity. Is to the end, you have to explain it to audit committee, you have to explain it to the auditors, you have to explain whether or not it's efficient or not, and it's just a lot of work for the team. So I think if anybody could make this easier, obviously that would be helpful. The second thing that I would like to say is that even though people don't think about evoking hedge accounting, hedging is something that all finance manager has to think about, because we do need to cover a downside risk, particularly when there is a fluctuation that if you see is coming. This is the reason why a lot of, my team is always encouraged, and myself included, to attend, seminars to understand which way is it going to happen.
Right. Here we are almost at the crossroads between, say, technology, accounting, and taxation, right? Because you could think of, and we do, right, of hedging programs that would allow you to smooth out net income over time in order to avoid the taxation at higher rates and therefore optimize taxation. Bonnie Tomei, let's discuss a little bit the hedging, so the foreign exchange hedging at US companies, and let's take as a starting point the case of Netflix. Recently, they announced that they were implementing a layered hedging program because of a 200 million drag on earnings due to the strong US dollar. And the question is not about the direction of the dollar right now. We don't really discuss that much, but broadly, what are US companies doing? What is the outlook in terms of using automation technology for the purpose of currency hedging?
So let's first talk about hedging. Why does Netflix or any other company bother with it? And the reason is, if you're thinking about being the head of finance, you would probably put together a forecast of what you think the future is going to look like, the number of subscribers you have, or how many ever wedges you're selling at whatever the local currency rate. Then you have to think about, okay, well, when I told the street it's going to be this dollar amount, it's going to be in a US dollar. That you may be meeting all of your metrics, but when you convert that into currency, you may lose something in between. Now, then this is the reason why they have to explain the drag on the P&L.
Right.
A hedging program obviously would be something that you would say, hey, since nobody knows what's going to be next year, I'm doing my planning right now at this rate, exchange rate, let's say is 1.2, and I could probably buy a hedge program into a contract. I will sell them the currency, that current foreign currency at 1.2 in the next 3 months, in the next 12 months, and therefore now I locked in exactly how much I'm going to be making. A very expensive, obviously I'm not, I don't know all of the information about Netflix or any other company for that matter. It is definitely a trade-off you have to think about. Mm-hmm. Boy, is it really going to do we think that the yuan is going to go further than 7.3? Who's got the crystal ball to really know where it's going to go? So there's going to be this band of sensitivity studies that somebody have already done, possibly with someone, looking at the Bloomberg, desktop and looking through all these exports of information to form a decision about how to do this. Is really to share and saying, look, we got to manage this. And I think that both the hedging as well as tax, and when I talk about tax, by the way, I don't just mean tax like income tax, corporate income tax. I'm talking about the tax regime, about moving cash from one location to the other, which has a drag as well, because it's not made to be efficient. A country that you have income in do not want that cash to leave that country and invest somewhere else. And whenever you move cash between countries and companies, subsidiaries, you always need to worry about what does that look like. Instead of repatriation, is there going to be an additional tax? However, I can also share with you that the U.S. government has put in all these different rules now. Even though you didn't bring the cash back in, you still have to pay taxes on it. And so if you have an income associated with that foreign operation. So it's definitely something that everybody has to go back to the drawing board, see the forest from the trees, and together as a sum to figure out how to make all of this efficient.
All right. Now, if we go back just very briefly to the Netflix case, I find it really interesting that they were discussing a layered hedging program, which is very demanding in terms of execution of the hedges. And they mentioned also 45 currencies. So it's really very difficult to think that they could achieve that manually, right, with their own treasury team without advanced automation techniques. But one additional point that I'm interested in having your opinion is, they say that they currently have 60% and even more of that of their total revenue in foreign currencies. How does it apply to other say technology companies in the United States? Do you see a trend towards more international diversification of revenue flows? So
I really think that that's very unusual because they're dealing with a local, their customers are consumers, right? A lot of the technology companies are selling to other technology companies. In my view, there has not been a lot of companies that really has been that widely exposed revenue and cost of goods. Well, mainly cost of goods, really, because the local economy may say, I don't want to hold U.S. dollars, and I don't want to have the, I don't want the risk, and therefore, from a supplier perspective, from a cost of goods standpoint, you may need to hedge that just to make sure that you don't pay more and punishing your own gross margin because of the currency exchange. So I think their hedging applied to most technology company, not necessarily on the revenue side, but definitely on the supplier side. And the layering, so when you talk about how to do this, boy, Netflix is a huge company. It's got great people working there, and they have also at their disposal lots of expertise available. I would not be surprised at all if they have not talked to all of their bankers. They've talked to at least one, if not two other Big Four or other esteemed CPA firms to provide this consulting services for them. I'm not surprised if they have not, looked at an automated solution to manage all of this, so then they have a very efficient studying of whether or not this is effective or not, because on a quarterly basis, you need to say, are these programs effective? And if they're not, you now need to book more journal entries. And I'm sure auditors have also been involved in this process, because do that to de-risk the entire program that I'm going out to the world and talk about. Right.
And just to finish on that topic, it's really interesting that if they have, to the extent that they have revenue in foreign currencies, especially say in euros, they're going to have the interest rate differential in their favor here as they hedge. So really, truly fascinating case. Bonnie Tomei, let's discuss a little bit, say, other broad priorities for 2024. I read surveys that show a difference, a really interesting one, in the outlook of treasury teams or finance teams in general in the US compared to Europe. And as Europeans are perhaps mostly worried about financial risk, it turns out that American treasury teams are more worried about things like cybersecurity. Tell us what is going on there.
Well, I can tell you that I think we all worry about the same things. What keeps us up at night? Cybersecurity, of course, is a big one. We all heard about even the Pentagon got, a lot of different companies got hit. The disclosure requirements in the U.S. is outrageous. You have to talk about whether or not it's significant in its impact to your P&L. You need, in many states, have different rules about cyber attack, whether or not consumer information has been shared, and therefore there's a huge program on how you need to announce and disclose. Of course, all of that, even the EU, I'm sure all those other companies are worried about as well. But of course, a lot of US companies are targets. And the reason why they're targets is because their information is widely available. They seem, and of course, all of the folks from the bad actors are looking to take advantage of that. And I can tell you that on a daily basis, even with sophisticated software implemented in our system, I'm personally, even in my own inbox, seeing at least 15 to 20 emails a day, even after filtering, that encourages me to click on something so I can download some kind of malware. It is amazing the level of attack that is going on right now. So I don't think it's a European versus a US company problem. It's really everybody's problem with cybersecurity.
Absolutely. Right. So you need to take those trainings seriously, right? Of cybersecurity risks and all of that. Now, Bonnie Tomei, recipient of the FEI Silicon Valley Women CFO of the Year. Thank you for this discussion today. We have gone through a lot of topics. We started out with the role of the CFO in 2024. We then briefly discussed the difference in outlook between the CFO at a, say, medium to large size US technology companies and the treasury team. We then went to the crossroads between technology, accounting, and currency management. We finally discussed, of course, foreign exchange hedging at US companies. And then we went to the topic of the outlook, or the difference in outlook between the, European risk managers and treasury teams and American teams. And you said very clearly let's not exaggerate those differences, and let's think of broadly the same risks. And I thank you for that. It was really, really a very interesting point. Bonnie Tomei, is there something else that you would like to add?
You know, when we talked about just the last topic of the cybersecurities, I wanted to also emphasize on a tool that you get is really needed for the service providers to provide a tool that actually provides internal control. The internal control would be in multi-factor authorization. As an example, it is to provide dual level of approval and authorization, or it's going to make it not so easy for anyone as in the executive team to part with the very valuable asset they have. And a lot of times it's cash. So thank you very much for that thought.
Oh, thank you.